Launched in 1998 as UTI Master Value Unit Plan, this fund was converted into an open-ended fund in 2003. The strongest feature of this fund has been its track record for dividend distribution. The fund declared a dividend of 100% for 3 consecutive years between 2004 to 2006. In 2007, it gave its investors a return of 60% and managed to contain the downside in 2008, falling in line with its category. In 2009, it outshone and found itself in the top 10 funds in its group. The fund gave a return of 117% in 2009, beating its category average of 96 for the year. In the following year, it remained in the top 15, beating the category average by 7%. The fund has a diverse portfolio, but its major investments are in the financial, energy and chemical sectors. Most of the top holdings in the financial sectors have shown positive growth.
Virendra, the UTI Master Value Fund is a fund with a tremendous track record for dividend payout, 4 stars on value research. In the last 1 year or so, it slipped a little. Its year-to-date return is about 16% compared to a category average of 21%. Do you think it's going to be able to regain its past glory?
This fund is undergoing a phenomenal change over time. In its 9-year history, it has undergone a big shift in terms of the way it used to be managed, the way it was conceived, and the way it is structured today. And a good part of its track record was built around a time when value was completely out of favor. So it turned out to be an extremely risky portfolio in its first 4 or 5 years, and then it turned out to be hugely rewarding. Today, the way I look at it is that it has retained its value orientation. Otherwise, too, I think that this is a fund which has to be held for a period of time, at least for a full market cycle, for it to fructify. This is not a kind of fund which you can typically buy to ride a momentum for a brief period. And going by the portfolio quality, it looks very impressive and promising.
Now, among the other funds from that fund house, how does it compare to, say, a dividend yield or UTI opportunities? Because we don't normally hear about this fund. It's not a high-profile fund. It doesn't get a lot of attention. So what would be your message to the investors who are still holding on to this fund?
I would say that this is one of the peripheral funds. It should not be part of anybody's core portfolio. UTI equity, dividend yield or opportunity, they have made a name for they could well be core positions in a portfolio, but not this one. One should look at it as an opportunistic play.
All right. Finally, Virendra, your rating of the UTI Master Value Fund, you did say a small part of a portfolio. It is a risky bet, but what's your final rating?
Based on its performance, I would say that among the one should look at it purely as an aggressive opportunistic bet, and I would give it a 4 star. Same as in the risk-adjusted performance rating.